Hello everyone, how's it going? In this video, we will talk about Palantir, trading under the ticker symbol PLTR. The financial market has been going through volatile swings recently, and one of the most talked about and sought after stocks has been Palantir. So in today's video, we will go through what the company does, what it represents, the recent price actions, the company's financials, and my recommendation regarding if it is a good stock to buy. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description section, as every help is greatly appreciated. Over the past week, Palantir has been able to increase its stock price by another 5% in the stock market, which is phenomenal given the fact that many people in the beginning of the takeoffs have initially said that it's probably going to take a week before Palantir starts to dip down, just because this is always what happened with Palantir before. Now, continuing its ascension is one thing, but maintaining this narrative, this positive narrative, is quite another. And to be honest, in that sense, Palantir has accomplished quite a feat. It has able to prove to the market its resilience and the continual interest that people have in this stock. So Palantir has been sitting on the $16 line in a sustained manner. It has done so, it has kept the line, and it's probably going to continue on for the foreseeable future. This kind of shows how Palantir remains a very decent investment potential that sits very highly in people's mind. That as soon as there is a good opportunity to switch the narrative for the better, Palantir will always be able to make it to new highs. So in the long run, and of course, keep in mind that we are still early in the day, right? If we're talking about the long run, I personally believe that Palantir will keep its capacity to attract capital regardless of the market situation. Like to a relative extent, people will always believe that if there is money that's willing to take risk, they may go to Palantir, they may go to Tesla, they may go to similar companies like those. Just like people are willing to buy QQQ as soon as the Fed is willing to cut the interest rates. Like it's almost a Pavlovian reaction. We should also wonder, with that being said, we should also ask ourselves, what would have happened if Palantir didn't show up with positive financial results for the first quarter of 2023? Doesn't mean that we will be here with a very different situation. Yes and no. First of all, yes, because of course it's not going to have that kind of reaction. Okay, because Palantir will not have that sort of influx of new demand. No, because in previous videos, I have mentioned sometimes that the gross profit margin for Palantir is positive, which is a major thing. This means that Palantir does have the opportunity to increase its scale in order to balance its books. It means that its business model does seem to work. That combined with the fact that Palantir does have quite a few deep client relationships that probably was secured thanks to Peter Thiel and his own connections. For people who are interested in Peter Thiel, then you can, first of all, you can read up 0 to 1. That's on sale in my description. So anything that you purchase on Amazon using my link can yield me some commissions without additional cost, which is always greatly appreciated. Anyway, I'll come back to the video. Peter Thiel definitely has been around the block for quite some time, and he has enough deep connections in both Washington and also in the tech world and also in the financial world for Palantir to have this sort of cushion of lucrative deals. Another thing is that Palantir, in comparison with Google, is much more willing to collaborate and to prove themselves to be a reliable partner in projects, even if they may be tricky in the eyes of the public opinion. So this is, I think, one of the edges that Palantir has compared to its competitors. So in the long run, Palantir is a company that has demonstrated its capacity to attract capital. Basically, I think that, where should Palantir be going to? Probably around $25 to $30 before we will hit pause for a minute and then start to look at the other way. With that being said, we should never forget that we are in a tricky market and that any sort of positive momentum can break at any point in time. Okay, so I may be saying $25 to $30 all I want. If on Monday it starts to dip, it should not surprise any of us. This is the market. This is what it sometimes does. This is what has happened on numerous occasions with many other stocks. So it shouldn't surprise us. All I'm saying is we are here to surf on the uncertainties, right? This is what the market is all about. Nobody can predict the future, so we will have to place in our chips at the right time. For me personally, I have held Palantir for north of 8 months. That has been significantly in the red before it turns into green. So for me, I mean, is it something that's going to encourage me to sell it now? No, of course not. I'm going to see where it's going to go before I make a decision. Now, let's also take a look at some of the stock's technicals. Palantir's trading volume has been around 90 million compared to the average of north of 120 million shares. Over the previous 52-week period, it fluctuated between $6 and $17. The volume of shares traded tells us how many shares are being bought and sold at any given point, and if there's enough liquidity to support a trading strategy. If the float is very thin, it will be very easy to influence the stock price, but low liquidity could mean that the demand is limited as well. When we compare the current volume against the average volume, there might be the possibility for trend reversal or breakthrough if the difference is very large. Like for example, if the stock were to break through, the current volume could be significantly higher than the average volume, that is for sure. The market cap of Palantir is currently around $33 billion, about half that much for the enterprise value. It means that the market is almost willing to pay double for the goodwill or the brand power of Palantir. I mean, does it sound reasonable? Yeah, it does. It's like this is not too far from many other tech stocks, and Palantir is definitely one of the better known tech stocks around the block. As we compare the current price to the historical price fluctuations, the stock is 73% higher than the 1-month low, 125% higher than the 3-month low, and 173% higher than the 52-week low. On the options market, we see that historical volatility is 83%, whereas the implied volatility is 73%. The put-call volume ratio is currently around 0.35, meaning most people are expecting Palantir to go up. Now, the most recent volume of options traded has been 403,000 contracts versus the 30-day average of around 600,000. In terms of open interest, both are around 3 million contracts, so the actual open interest volume and also the 30-day average volume. Regarding the shareholder structure, Palantir is currently owned by institutional shareholders to the amount of around 33%, which is likely a result of outright ownership and also short selling. So usually, it's always good to see some institutional participation when holding a stock for the long term, because it offers a layer of stability and a token of reliability in the medium to long run. It means that the market is confident enough to put money with the company for the long run. This is an important factor to consider for investors. I personally think that the threshold should be between 25 to 30% minimum for the stock to be considered for long-term investment. The current short interest is around 8% of the total float, and 60% of which happens out of the dark pools. If we look at the long-term price action of Palantir, we must ask ourselves whether this company will have a place in the economy of tomorrow. We know that the company will not be profitable for another few years. That much has already been priced in. We also know that Palantir is in a highly sophisticated area of the economy, and that it aims to become the analytic dashboard of the wealthiest entities around the world. The true debate is whether Palantir itself can stand the test of time, and whether the market will believe in its potentials to become something bigger and more critical. Palantir fell by almost 80% from the peak of the share price, from $35 down to $7.28. Much of this is due to the overall market trend, and the rest is caused by doubts on the company's growth potentials, as well as the business model to work with government agencies. Now, personally, I believe that Palantir has been testing its bottom for some time now, as the downward slope stopped the progression for more than 6 months. Ever since the price reached about $8 back in May of this year, the rest of the downward slide is probably caused by the habit of just going lower by default. Does this mean that the stock will reach new high very soon? Maybe not. But on the other hand, I do believe that Palantir will have a place in the future and that its price is due for some significant change as well. Given that it's been down by so much, the only logical direction that it's going to go is going to be up. Palantir Technologies is a software company specializing in providing big data analytics and management solutions to various industries, including finance. The company's flagship product, Palantir Gotham, is a powerful platform helping organizations to make sense of their data by providing advanced data integration, analysis, and visualization capabilities. One of the key features of Palantir Gotham is its ability to integrate data from a wide variety of sources. The platform can work with structured and unstructured data, including text, images, and videos, and can also handle data in multiple formats and languages. This makes it an ideal solution for organizations with data spread across multiple systems and departments. It also provides advanced data analytics capabilities, including natural language processing, machine learning, and predictive analytics. Those features allow organizations to uncover hidden insights and patterns from the data. Another key advantage of Gotham is the ability to provide secure and role-based access to the data. The platform uses a combination of technical controls and policy-based access to ensure that only the authorized users can access the sensitive data. This is very important for organizations in the financial sector, which are subject to strict regulatory requirements for data security and privacy. Palantir's solution is widely used by government and intelligence agencies, as well as by major financial institutions, consulting firms, and other kinds of organizations around the world who can afford it. This is due to the platform's ability to help these organizations to make sense of their own datasets and to identify patterns and trends that could optimize their decision-making. Now, as we look at Palantir's financials, the first thing that is noticeable is the positive gross margin. Above all else, this is a decent reminder that the company's core business seems to work. It is true that revenue has been growing slowly, which sparked some worries from investors, but the fact that the gross profit is positive means that the main issue is the scalability and the diversification of its operations, which may solve the problem once they reach a critical number of clients. We gotta remember that Palantir's revenue managed to grow despite the fact that there is a de facto recession in many economies around the world, meaning Palantir's clients are relatively robust, which can be a good thing for the company. The cash flow reports suggest that despite having a net loss due to the fixed costs, Palantir can self-finance significant portions of its operations with a positive free cash flow at the end of each quarter ever since Q1 of 2021. This means that the pressure of Palantir to go through rounds of share dilutions would be relatively low, which is a good thing for the shareholders. Another significant aspect to consider is that its liabilities seem to be under control, currently around 933 million, which is mostly constant and slightly decreasing compared to the previous quarters. This is also very reassuring and suggests that Palantir is also keen on making sure that they have a low leverage, decreasing their solvency risks. There's about 33% of institutional owners amongst Palantir's shareholders. So what this means is that Palantir does have a significant endorsement from the money managers, but they are largely outnumbered by the retails, and that there will be a significant chunk of people going in and out of the stock based on the market movements and the short-term price actions. It would also suggest that Palantir is good for investment, but if we do so, we must be aware of the people who want to profit off the swings, meaning we need to ignore the short-term volatilities. One key behavioral difference is that institutionals can afford to wait longer for their profits, whereas the retails tend to come in and out in very short periods of time because they want to make quick profits. Also, institutional shareholders tend to be more active in corporate governance. They are more likely to vote on important matters like mergers and acquisitions, compensations, appointments, and so on. They're also more vocal in their opinions, whereas the retail shareholders, they tend to be more silent and more passive in front of different decisions to be made. Currently, there are around 4.2 million shares shorting against Palantir. Some believe that there might be potentials for a short squeeze, because those 4.2 million shares would need to be redeemed at some point, and right now it takes about 4 days to fully recover. With that being said, I believe that Palantir currently has a certain volume of short positions because people truly believe that the company has a lot of headwind against it. I don't believe that they are concerted, and they're also not entirely institutional. It's important to note that a short interest is not a guarantee of a short squeeze, but it's a metric worth monitoring for the investors. It's also worth considering that the short sellers may have valid reasons for their bearish sentiment, and a short squeeze may not happen regardless of how many stars are being aligned. Now, my current recommendation for Palantir is definitely to hold on your position. Don't sell just yet. And also, if you still have any allocation for this company, I don't. But if you do, consider to increase this exposure up to like $18 to $20. Of course, it would increase your exposure and your risk for adverse price action, but it would also increase your exposure overall. In my opinion, this current momentum may last till like $25 to $30. This is why I would say it's recommended to consider this option. With that being said, it would also be totally fine if you decide not to pursue on that path. So generally speaking, I would recommend to commit between 3 to 5% of your portfolio in Palantir, and to use this allocation in batches of 20% at a time so that you can purchase more in case it retraces.